Students, now we are going to talk about fundamental analysis. So today every day is a new beginning. So now we are going to discussing about fundamental analysis. The basic fundamental analysis means what? So fundamental analysis for investors. So what is the purpose of investor? They should analyze fundamental analysis in every life. So because fundamental is nothing but it is a basic and theoretical concept of analysis, and also it is very useful to analyze the best performance of every companies in the current market price. So fundamental analysis is nothing but the basic fundamental analysis, meaning is a method that is used for measuring the intrinsic value of stock or security. So it mainly depends on the economic factors affecting the business and its financial. So now for example, if you are going to invest a stock or select a company of the intrinsic value, we must analyze the fundamental analysis. We must measure the intrinsic value of every company or stock. So the fundamental analysis is depends upon the macroeconomic factors because it will be affecting the business and also it's a financial position of every company. So fundamental analysis, there are two different fundamental analysis types and they are quantitative and qualitative. So there are two approaches, qualitative and quantitative. In the both approach is important in every analysis because the decision is based on both qualitative and quantitative. So because qualitative is it is a important, it is a qualitative accurate data or information. So quantitative is nothing but it is a numerical number. So the decision making is based on both qualitative and quantitative. So without anyone we can't do take any correct decision. So these two approaches important for every fundamental analysis for the every investors. So first qualitative approaches means what? So the fundamental analysis stocks that involve brand value, the financial performance of the company, management decisions and other similar factors can be termed as a qualitative approach. Next one, quantitative approach is nothing but it includes numbers. So it is nothing but it is a numerical numbers. So it analyzes the numbers in the financial statements and draw a conclusion about the price of the shares. So for example, in a particular company they should financial in they have there is some financial information we should analyze the data, so like a financial statements and draw a particular conclusion about the overall statement analysis or price of the every companies. So there are some basics of fundamental analysis. For the fundamental analysis strategies, there are a few fundamental analysis basics which needs to be considered. So these are primary factors which affect the analysis of the stock and the first one is company's revenue and its structure. So everything is everyone having a revenue. So the company revenue is most important and also it's a capital structure. So growth of the revenue over the years. So how the companies is growing to be last 5 years. So profit made by the company in the past 5 years, debt structure of the company. So next one, rate of turnover. So next one, components of the fundamental analysis. So fundamental analysis consists of three main parts. First one, economic analysis, second one, industry analysis, third one, company analysis. So these are all the most important three components of fundamental analysis. So there are three components. First one is company, second one is industry, third one is economic analysis. In that, in the onion, it shows the onion. The first stage is company analysis. Inside of the second stage is, it is a industry. Third, entire outside of the onion, it shows economic. So because in the current scenario, but in the world, every individual company is called, it is a company. So the companies, more than 2 or 3 companies is called, or 10 companies is called, more than 10 or 15 companies is called, it is a industry. So that is on the overall industrial is called, it is comes under the economic. So that is, it shows economic. It shows the first stage is inside of the organization, that is company. Second stage is industry analysis. Third one, entire economic analysis. So economic analysis is a process in which business owners gain a clear picture of the existing economic climate as it relates to their company ability to thrive. So economists, statisticians and mathematicians often carry out this analysis on behalf of for profit and non-profit business. So economic analysis, in that there are number of factors. The first one is growth rate of the gross domestic product, that is the GDP, saving and investments. Third one is industry growth rate, inflation, agriculture and non-monsoons, interest rate, government budget and deficit, the tax structure, balance of payment, demographic factors, political stabilities. So while we are going to analyze while we are going to analyze the economic analysis, we must consider about these every points. So economic forecasting techniques. So these are all the 5 forecasting techniques. First one, anticipative surveys. Second one is analysis of key indicators or barometric approach. Third one is econometric building. Fourth one is opportunities modeling, model building or GNP models. And the next one, complex statistical methods. So now, why fundamental analysis important? So already we discussed about the 3 components. So fundamental analysis, first company analysis, industry analysis, economic conditions, future profit outlooks. So fundamental analysis helps in evaluating a stock intrinsic value in order to find out its long-term investing opportunities. This analysis will also consider the overall condition of the economy and elements such as production, interest rates, employment, earnings, housing, GDP, management and manufacturing. So in that, highlights of the fundamental analysis. So the first one is fundamental analysis examine all factors which can have an impact on the security's value. This includes both a macroeconomic and microeconomic factors. Second one is when the fair market value is greater than the market price, a stock will be considered as undervalued. A buy recommendation will be given. The third one is fundamental analysis helps in evaluating a company stock and foresee its potential price evolution. The fourth one is the types of fundamental analysis are classified into 2 types. The first one is quantitative and qualitative. Thank you.